Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Markets concluded an eventful week marked by major G7 central banks policy announcements and a surge in volatility across equities and bonds. Global equities trended lower following weaker than expected US manufacturing and jobs data, which indicated economic contraction. In the US, the S&P 500 fell 2.1%, while the Nasdaq Composite fell 3.4%, entering correction territory amid tech sector sell-off following earnings disappointment. Japanese equities fell over 6% following the central bank's policy action. Other Asian markets also remained under pressure, dragged lower by Philippines, Taiwan, and Korean equities, which fell over 2% each amid tech sector weakness and a contraction in Chinese manufacturing PMI. During the week, the US Fed kept its policy rates unchanged but indicated that a September cut was on the table as greater progress has been made on reducing inflation to its 2% target. Bank of England lowered its policy rates by 25 basis points to 5%, marking the first cut since the start of the pandemic in March 2020. However, the Bank of England governor warned markets against expecting a sharp fall in the coming months. In a surprise move, the Bank of Japan engaged in a double tightening move, hiking its overnight policy rates by 15 basis points to 0.25%, marking the second hike in 17 years. It also followed the hike with a reduction in bond purchases to Japanese yen 5.3 trillion in August and September of 2024 from 5.7 trillion in July 2024. Back home, Indian equities capped an 8-week winning streak. The Nifty index rose earlier in the week, scaling a new all-time peak above 25,000, supported by improved earnings reporting during the week and positive global cues. However, it came under pressure on Friday amid foreign investor outflows on the global equity sell-off, clocking a 0.5% weekly decline. Broader markets outperformed the Nifty index, with the Nifty Midcap index up 0.3%, while the Nifty Small Cap index was down 0.3% for the week. Among sectors, utilities and energy led the winners with gains of over 2.5%, while IT and realty led the losers with cuts of over 3% for the week. The Indian fixed income market had another decent week, with government bond yields falling across the curve, driven by a sharp decline in US bond yields and strong foreign investor demand. Yields on the 10-year Indian government bond yield fell 4 basis points to close at 6.9% amid a surge in demand after the announcement of FPI investment restrictions on the new 14-year and 13-year Indian government bond issuances. The INR gold rose 3%, recovering from the previous week's sell-off. Brent crude oil fell more than 1% on Friday, posting a third consecutive weekly decline to close at $77.6 per barrel, as China growth concerns weighed on demand outlook after data showed oil imports to China were down 10.7% year-on-year in the month of June, while refined product imports fell 32%. The INR closed flat against the USD at 83.73 per dollar after touching a new all-time low, as the impact of foreign investor outflows and strong dollar demand from domestic importers were negated by lower crude oil prices and falling US bond yields. Now coming to the macro updates for the week. The first was on India's manufacturing PMI, which eased marginally to 58.1 in July of 2024 compared to 58.3 in the previous month and below market expectations of 59. However, strong demand supported a significant rise in new orders, while growth moderated from June. Sales continued to be sharp by historical standards. Production volumes also remained strong, leading manufacturers to increase their purchasing activity and hire additional staff in July. Input costs continued to rise, driven by sharp demand, reaching one of the fastest rates in nearly 2 years, also pushing the output charges to their steepest growth in the past 11 years. The second update was on India's core sector, which showed that India's 8 key infrastructure industries recorded the slowest growth in over 20 months, expanding 4% year-on-year in the month of June compared to an output growth of 6.4% in May. The sequential slowdown could be ascribed to factors such as a high base and moderating demand because of the monsoon. Output for coal and electricity remained strong, while staying positive for cement, steel, natural gas, and fertilizer sectors. However, output contracted for refinery products and crude oil. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.